Conspiracy theorists will argue that money isn't real, but just a concept. To some extent, that's true. We're the ones who set the value to things and determine what and how much money is to be used for the trade. Now that we know money serves as a trade medium, what are some of the misconceptions you've heard about money? For starters, you might think that only the rich have a chance at investments. At least, that's what society tells us. What if I told you it's a lie and anyone can begin to invest with a small sum of money? Well, stick around to find out more of these lies culture tells about money. And some, you'll discover, are quite shocking. 1. Bank accounts are the best place to keep your money. Banks have been around for centuries, and they seem like a safe bet when you've got tons of money laying around. They're believed to be convenient, and most of us are lured into opening savings accounts. While savings are great, having all your money stashed up in a low-interest savings account isn't the wisest choice. If it's a small emergency fund, then that makes sense. Many people just tend to keep more than enough because it's deemed safe. One thing that's risky with a savings account is that cash is not an investment, and whether we like it or not, the value of money keeps decreasing with time because of inflation. The best way to make money work for you is by investing in stocks rather than leaving it to sit in the bank. At first, it may sound risky considering how volatile the stock markets are, but despite the ups and downs, the value does rise over in the long run. Whereas the value of cash decreases due to inflation. Also, consider putting some of your money into basic investing vehicles, like low-fee funds or ETFs that can help you build wealth. If you're not familiar with all these, try seeking information online, or consult a financial advisor. Did you know that most millionaires don't even have $1 million in their bank accounts? Most have them out in investments and appreciating assets. If that's not a wake-up call, I don't know what is. 2. You need a lot of money to build wealth. Another lie. Thanks to fintech, you can start with as little as $5 if you wanted to start saving and investing towards your goal. If you're employed, there are other options like participation in your employer's 401k's contributions. Remember, this isn't your old man's world anymore, so the barriers do not stand a chance. Why people believe that you need a lot of money to build wealth is because sometimes it feels like it will take decades to build substantial wealth, which seems daunting. However, saving isn't about getting stinking rich, but instead building enough financial muscle to ensure financial security throughout your lifetime. As mentioned before, fintech has made everything easier, and this gives room for your savings or investments to grow faster than you might think. Thanks to the power of compounding, you can start small and build substantial savings by setting aside money consistently. And it doesn't matter that you may not have come from a lineage of wealth. What matters is where you're going, not where you came from. Even the vast majority of rich people are first-generation rich people who started with very little. 3. Credit cards are our friend. Credit cards can either work for you or make your life miserable. Many Americans fall into the credit trap because credit cards offer them the chance to live the American dream lifestyle. People tend to misuse the benefits and spend more than what they're able to bargain for, leaving them with tons of credit card debt. Although they do carry some benefits, especially if you're able to pay up on time, the damage they can cause when mismanaging them is far much worse. When you do not have money coming in to satisfy your lifestyle, avoid credit cards at all costs. No matter how tempting their benefits or commercials are, credit cards are not always your friend. 4. Credit score is not that important unless purchasing property. It baffles me that people believe that your credit score isn't important simply because you don't have the American dream of owning a home. However, applying for a mortgage isn't the only time your credit score comes into play. Your credit score can save you or cost you a lot, depending on how high it is. If you're keen enough to follow up on when your score might be checked, you'll be able to manage your bills and debt wisely. If you don't acknowledge how important a credit score is, try renting. Many landlords take your credit score into account before renting a property to you, and utility companies often require a credit check before allowing you to open an account for household utilities. Also, if you wish to seek a bank loan to facilitate a business or an investment, your credit score needs to be attractive because banks do examine this before even considering lending you a single coin. 5. The cheapest option is always the best option. While it does seem like a great deal to get something for cheaper, it will only make sense if the price difference saves you in the long run than just temporarily. Whether it's with your finances or your health, career, relationships, the list could go on and on. There's usually a reason why something is so cheap. Just be sure to take in all the variables rather than singling it out based on price alone. A good example is sustainable clothing. As much as fast clothing can cost you less, they can only serve you for a short period of time and are usually trend items. With one wash and you find the clothing looking like a souvenir from the 1900s. However, if you spend thrice that amount on sustainable clothes, you find that it serves you for a longer period and even hand it down for generations to come. In short, cheap is expensive. There are no compromises to quality and value. They go hand in hand. 6. Wanting more money is bad. We all hear from time to time that money is the root of all evil, and most times those who seem to want more of it are considered the devil. Don't get me wrong, as much as being consumed by greed is bad, wanting a better future for yourself and everyone around you is a great view of money. With money, you open up opportunities and the options widen your preferences, not just as a matter of settling out of convenience. So please, don't let others bring you down if you've found yourself eager and excited about wanting the comfort that comes with having more money. Money is not the devil. It's how you treat the money that's the differentiator. 7. You can never get out of debt. It's a doom life sentence. With 50% of Americans dealing with a negative net worth, it's not shocking that a majority have this mentality that debt is there to stay like a life partner. In fact, we live in a very consumer-driven economy, which makes it hard to resist the temptation to spend, even when we don't have the means. In return, this results in more debt. To some, it's a mentality that needs professional help. You may come to realize that many people actually use spending to help them feel better about their debt situation, almost trying to convince themselves they can handle it. But that attitude is like standing at the bottom of a large hole, saying you'll get out by digging the hole deeper. Rather than succumbing to depression believing things are beyond your control, you can make the decision to improve your financial situation. It may not take a day or two because it took time to get you into debt in the first place, so give yourself a reasonable timeline to fix things. It is possible to get out of debt. And once you're out of debt, you'll be surprised how great it feels to have peace of mind about your finances, and how good it feels to not live from paycheck to paycheck. You can start by focusing on a single debt payoff, either one with the highest interest rate or the one with the smallest balance, which can be paid off the quickest. Then move on to the next, and so on until they're all paid off. 8. Social Security and Medicare will save you when you're older. We tell ourselves this so we don't have to save as much when we're younger, and end up spending more money without a vision for the future. But the younger and wealthier you are, the less likely it is that you'll be able to depend on Social Security. The reality is that Social Security was never meant to be the main source of retirement income. It was simply created as a safety net. Today, the average Social Security payout for retirees is equivalent to a minimum wage job. On average, it takes most Americans about $2,500 to $4,000 per month to be truly independent in retirement. Many can live on less, but there's not much living going on. Instead of relying on a system that's close to bankruptcy, take charge of your own retirement and start saving while you're young. Also, take advantage of any retirement savings your employer may be offering to avoid disappointment in old age. 9. I deserve it mentality. You deserve all the happiness in the world, but there's a big difference between getting something you've earned and getting something you deserve. It's easy to tell yourself you quote-unquote deserve something when trying to justify a purchase you probably know isn't necessary but really want. It's like getting the latest iPhone just because you were able to clock in those extra hours at work, yet you already have a fully functional phone. Reframe that entitlement with a bigger picture. What you really deserve is to have financial peace of mind. Before making an impulsive purchase, ask yourself whether you need it or just want it, and the honest answer will provide some clarity. Think about how you'll feel when you can't pay other bills because of this purchase, or when you receive a credit card bill you can't afford. If it's an important purchase, save to buy it. The best way is to set up a separate savings account and make regular deposits until you can afford to buy what you want. Don't let that extra hard work go in vain and waste in liabilities. Instead, make the sacrifice. Also, entitlement is what makes the overqualified stay jobless because of high expectations. With the way things are going, if you don't make it a point to hustle and go after what you want, you're likely to be disappointed over the years, and that's not good for anyone. 10. Being good with money means you're a better person. I don't mean to burst your bubble, but being good with your money just means you're good with your money. It has no relation to what type of person you are. The opposite is also true, but there are poor folks who are angels with pure hearts, while millionaires who are something close to the devil's relatives. As much as we're all about making that money and getting our goals right, it's important to remember that this is just a small sliver in life. There are greater importances out there. And being a decent human being to others is surely one of them. As we strive to reach financial freedom, let's not forget to be ethical along the way. Thank you guys so much for watching. Have a great day, and I'll see you all in the next one.